morning, traders. Matt Weller here, Global Head of Research with FOREX.com. I'm coming at you with slightly singed eyebrows here after a bit of a grilling mishap yesterday, but the good news is I'm all right, and looking at markets today, June 25th, 2026, markets are increasingly all right. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. Touching on the Middle East first, as we have done for most of the past couple months, we see traffic through the Strait of Hormuz starting, and I'll emphasize that word, just starting to normalize here. We had 28 confirmed crossings of the Strait of Hormuz yesterday. That's the highest level since the US-Iran hostilities broke out. And notably, these are the ones that are being captured. That means these shipping companies are running their radars. They're feeling increasingly confident making that crossing safely. And as a result, that is weighing on oil prices down 3% ahead of the US Open. We also see gold prices falling 3% as far as notable moves to watch. Thankfully, with the situation in the Middle East seemingly normalizing, we can focus on more traditional economic drivers, and the area I'm focused most intently on this week is Japan. In Japan, we saw Bank of Japan Governor Ueda noting that he expected further interest rate hikes as inflation starts to rise. Separately, we saw Finance Minister Katayama. She said that the finance ministry remains committed to responding appropriately to currency moves at any time. This, of course, is a reference to potential intervention in the yen as that currency falls to about 40-year lows. More on that to come. But I do want to emphasize that traders, at least, are pretty skeptical we'll see any sort of interest rate hike support soon, pricing in only about a 25% chance that we could see an increase in interest rates in Japan before the December meeting. And then one last flag here. There's not much in the way of economic data during today's US session, but something that could be of more global macro importance are earnings from Micron. This was a tiny company as recently as a year ago. Now it's more than $1 trillion in market cap, right at the center of the memory boom that we're seeing as sort of a second order effect of the AI boom. Depending on how those earnings come out, that could influence sentiment more broadly across other markets. So you want to be tuned in there after market close. Looking at the dollar yen here, and I want to start with a look here at sentiment. This is from the sentiment tool on Forex.com. You can see here that traders are 91% short dollar yen, a very extreme positioning relative to what we've seen historically. Essentially, traders are putting faith in the Ministry of Finance and the Bank of Japan to intervene in the dollar yen. I'm at least a little bit skeptical. I wouldn't be shocked if we see another round of intervention to strengthen the yen, bring down all those yen crosses. But anytime you get positioning at such an extreme level, the market often moves in the opposite direction, which in this case would be toward more yen weakness or strength in currency pairs like the US dollar versus the Japanese yen. Today's chart of the day is the dollar yen. Looking at it here on a 4-hour chart, you can see that very obvious uptrend indicating ongoing yen weakness. It's actually testing the 40-year high in the case of this currency pair right around 162 or so. I can almost see the script here where all of those traders who are short likely have stops set around that 162 level, anticipating that the Ministry of Finance won't allow dollar yen to go above that. If it does, and that's certainly a possibility, we could see a very quick move up toward 163, maybe even 164 in short order if traders lose faith that the Ministry of Finance will defend that level in the yen. I've also plotted the 2-year interest rate spread between the US and Japan here. Of course, a lot of this US dollar strength comes on the back of a relatively hawkish Federal Reserve meeting last week. That has driven up interest rates in the US dollar across the board, and those are supporting continued strength here. So it's not a move without fundamental backing, and I think there could be room to run further if the Ministry of Finance decides to let this level go in the interest of taking a long-term view, and we could see dollar yen spike higher if that is indeed the case. So lots to watch for here heading through today's session and perhaps through the rest of the week. Keep it tuned to Forex.com for more analysis. And if I can ask one quick favor before you go, please do drop a like on this video. It's a free way to show your support. It helps us with the algorithms and will keep us producing more of these videos moving forward. Thanks again, and best of luck with your trading today.